We are live from the Bloomberg Invest Conference 2025. We have all the top minds in finance talking about the pressing issues, not only how to invest money, but the future of some of the significant things and the transition that we're going through, like, for example, AI. And here joining us on set is Bin Ren. He's founder and CEO of SigTech. Now, SigTech is a London-based fintech company spun out of Brevan Howard in 2019, and it basically tries to help quants and users manage the capital markets. I'm not really sure I know what that means, so luckily Bin is here for us. All right, so give us the quick pitch on what your company actually does.
SigTech, we build specialist AI agents these days to help people make better decisions in capital markets, but also to automate a lot of the very high-value intellectual but not very creative workflows. We can reduce a lot of the things people do today, which are a bit boring, down from many hours to 30 seconds. I think that makes a big difference in terms of productivities.
All right, here's an example that I can think of from my...
Okay, tell me.
Being at the printer, not far from here, a couple blocks from here, Don Lilly, at the 2, 3 o'clock in the morning going over a bond prospectus. That's probably something that AI can help with. So, Ben, how much are asset managers, generally speaking, how much are they using technology today? How computerized is it? How quantitative is it?
I think in the last 15 years, there's a big trend in asset management to adopt more and more technology. And we can see this shift in terms of people using more data-driven investment processes, and people hire data analysts. And but Gen AI in the last few years is a big step change. I would say it's a unprecedented change in this trend. Just in terms of it's no longer incremental. There's a before and after. And when we think about previous technologies, we mainly focus on what we call explicit knowledge that we can codify, describe, and therefore use programming language to automate. But only until now, we are able to distill and automate so-called tacit knowledge, the knowledge that resides in our head, but we can't really so easily write it down and describe and codify. But now we can actually automate those, and there are plenty of those workflows and processes, especially in financial services.
So how would you help like a regular quant manager? Like I go to you and I'm like, hey, I need your product to help me get better, faster, find better trends in the market.
Yeah, for quants, I think quants started with more number-driven. Trend following is if you do it like in a very simple way, it's entirely number-driven. But these days, we are moving to a world where we have to deal with numbers and text as two modalities at the same time. It's no longer just about technical analysis, but it's also about absorbing new information and turn non-numerical information into numerical information. And that's something that Gen AI does really well. Because fundamentally, if you think about how it's trained, it has been trained on trillions of tokens of textual data. And a lot of things we used to do in a bespoke or proprietary fashion, these days we get out of box, such as sentiment analysis or extracting relevant information from very long pieces of text. These sort of things actually change how quants approach their daily jobs.
Are the big Wall Street firms making these investments, or is it more the hedge fund community that is more receptive? Who are your customers typically?
So these days we mainly focus on buy side.
Okay.
But we also have very big clients in terms of like commercial banks, using our technology to completely change how they underwrite commercial loans. I think so. I wouldn't say it's a sell side or buy side or big firm or small firm. I don't think that's the main reason in terms of adoption. I would say the main reason is the leadership. When you approach something so unprecedented, it takes some time to build a consensus inside your organization about what's the strategy, what do we do. But that may take 2 months, 3 months, and given how fast things change, after 3 months it's a different world.
Yeah.
Right. So it really takes some kind of a conviction from a visionary leadership team to adopt this technology very confidently.
Yeah. After 24 hours, it can be a different investing landscape. So what's the best partnership between AI and humans? 50-50? Is it AI 75% of the decision-making process, 25% for human. How do you think about that?
Yeah, I think if I think about the knowledge work we do every day, I would describe them as most of them maybe not creative, but intellectual, right? Analyzing a lot of documents, picking out the right information. It's intellectual, but it's not creative. So in the future, humans should devote almost all their time to creative stuff, what makes us different. Whereas the boring intellectual stuff can be automated by AI agents. On the other hand, we are certainly seeing a big change in the user experience, the user interface, because up to until this point, people approach Gen AI mainly through a chatbot. There's a chat box, you type into it, you get some response. It's very nice, and it's really started the era. But going forward, we are looking at a user interface that allow a human to essentially collaborate with a large number of AI agents who specialize in different things. So how does that user interface look like? And how does that AI-human fusion intelligence look like? It's a very active field of research, trial and errors.
So this sounds like, from what I understand of AI, a lot of computing power requirements. Talk about the investments that you think these financial firms need to make, are making, or maybe need to step up.
Yeah. In terms of intelligence, the way I think about it is it's very similar to electricity.
Okay.
So we are currently in the first stage of investing in the infrastructure, right? And if you're going back in history, in the last 200 years, and the way we started building electricity grid, there's one magical number, which is 1%. The countries throughout the history spend about 1% of nominal GDP on building power grid, from 200 years ago in Britain all the way to today. So the big tech this year announced $300 billion of investment into Gen AI data centers. That's almost exactly 1% of the US GDP today. It's about 30 trillion. So in terms of infrastructure investment, we are there. And people are building incredibly big mega AI clusters across the country. Now, but we are shifting toward the application layer, right? Because once you have electricity, it's not about electricity per se, it's about what kind of appliances you can build powered by electricity. So we are moving into that stage too, where there are a lot of investment, both in terms of talent and capital, into building the right applications that can actually make a big difference to the knowledge workers in terms of productivity. So we are starting that phase.
Last question here for us. I asked this of Mark Mahaney too, is what's the biggest misconception right now when it comes to AI and using it?
I think the biggest conception is, I think people tend to either underappreciate its capabilities, or sometimes getting over optimistic. It's quite hard to get it right. It's
like too much or too little?
Too much or too little. So I think most people are either under-hyping it or over-hyping it. It's very hard to get it right. But one thing is very obvious to us is that the pace of the change is unprecedented, and it's getting better. Like the DeepSeek just introduced open sourced all their efficiency engineering tricks to the whole world, and then everybody is going to adopt it. So all of this is pushing the efficiency frontier. So we're getting better and faster every day. So people should be prepared for the big change.
All right, Ben, thanks a lot. We really appreciate it. Ben Ren, he's founder and CEO of SigTech. It's like a Goldilocks thing. It's like no one actually knows, so it's either going to change the universe or it's going to ruin it. Somewhere in between.
$350 billion of CapEx.
Yeah,
wow.
That is definitely not chump change.